Hello. Good morning to you this morning. My name is Ayodele-Bamisaiye of Dexter Professional Corporation, coming to you live from our offices here in Calgary. And it's another Finance Friday. Yeah. I know you're wondering, why do I have all this much energy, right? Well, guess what? Last week, Friday, I was away. I was out at the crossing at Ghost River. That place is a beautiful place, rural Alberta, but loved it. Thanks to the guys from the Leaders of Tomorrow Foundation, Tony Myers, Andrea Purdy, Sandra and Justin, and Jan, of course. Who can forget Jan? It was fun hanging out with you guys throughout last week. That was an experience. And to all the other leaders that I shared that experience with, I salute you again. I see you. I respect you. I appreciate what you're doing in the community. You're making a difference and you're making a change. And thank you for the impact that you had on me through that week. So because of that event, I was not here last week, but I wrote an article about my subject of the day. And today I'm here once again, and it's Finance Friday. I am still talking tax planning. Yes, I am definitely still talking tax planning. So we're going to get into that. Definitely, we're going to get into that. But before that, I wanted to just bring to our attention the standard things that I bring up here. If you are of the modest income persuasion, i.e. family income of $50,000 or less, and for whatever reason you have not filed your personal tax returns either for 2024, 23, 22, 21, going back 10 years, maybe 12, 15, and you need help getting those filed because you can't pay to have it done and you can't do it yourself. Well, there's a solution. You can reach out to my friends at the Financial Empowerment Initiative Network, and somebody will be happy to help you get those tax returns filed at no cost. Yes, I said that, at no cost. So send an email to operations@thefei.ca, and somebody will come back to you requesting a time so that we can look at your personal information and get those tax returns filed. And that will give you access to the benefits that are due to you from the government of Canada. That's number one. Number two, this week was Innovation Week. That was excellent. Congratulations to the guys at the platform. This was just such a show, right? First things first, we got to be part of the opening act of Monday morning, putting up a seminar. Evo Puta, thank you. Tolu Amadi, thank you. Excellent presentation you guys put together on artificial intelligence for business and personal productivity. And I see Evie has been putting up some of those posts on LinkedIn. You can check them out when you have a minute. Thank you to the guys at the platform for creating a room, making space for us to have that there. That was beautiful. I thoroughly enjoyed it. And yes, of course, I was at the lunch party last night. That was also excellent. Thank you, Jen Lucier, for everything that you do, everybody at the platform. Thank you for all that you do. And like I have mentioned on my posts on LinkedIn, Startup Court is launching a webinar series. It's called the Launchpad, and it's just 8 webinars if you are in that space where you're considering entrepreneurship, or you just started, or you already have a business or a startup, and you're wondering the elements you require to go from idea to enterprise, from R&D to cash flow. Let's walk through this series of 8 together. We're starting with the mindset of an entrepreneur with Dave Daigle. That's happening on November 12th. You can hit me up on LinkedIn or check out the details on the Startup Court page on LinkedIn or Instagram or Facebook. All that information is going to be out there, and we are looking forward to supporting the community in that way. So what's today's Finance Friday about? What am I talking about? I'm talking about smart saving. Why exactly am I talking about saving when the money is not even enough? Well, because if you earn income and you don't save any of it, then you can't invest. And that means any idea of you having money outside of when you can work actively or building any kind of wealth is a pipe dream. That's a fact. And the government of Canada has been gracious enough to create in the law all of these registered accounts that are there to support you. And that is why I'm talking about smart saving. Because right there at the intersection of all of this is your tax planning, right? Yes, you're working, you have a job, you're earning income. Yes. There's opportunity for you to put money away. Yes. And that money is good for you if you do that long term, for your long term financial well being. Now, the government of Canada wants you to actually do this. And that's why they set up a plethora of registered accounts. What is a registered account? And a registered account is an account that you are able to set up on the back of legislation. It's not just a bank account. It's a bank account that is its use, its set up, what it can be used for is entrenched in the law, particularly in the Income Tax Act. And these things create tax benefits for you either on earned income, historical, or future income, tax-free earnings. Now, what are all these accounts? We know all of them. We know every single one of them. I've talked about your registered retirement savings plan account, your RRSP. The RRSP is a powerful tool for saving on taxes. You earn $100,000, you put away 18,000 based on your RRSP contribution room. Your earned income drops all the way down to $82,000. I can tell you for free that you're getting a healthy check back from the CRA in April when that happens. Everybody wants to get a healthy check back, right? That's the point. So I want you to take a look at your RRSP contribution room and make plans to ensure that you put in sufficient to get yourself a good break on your taxes for 2025 in 2026. Now, what are the other accounts, you ask me? The TFSA. Now, the TFSA does not create for you a tax advantage. No, that's not what it does. At least not on your historical earned income. What it does is create an unfair advantage for you on your future income. So any money that you put in your TFSA that is earned in your TFSA is earned tax-free. You heard that right? I said it is earned tax-free. So what are you doing with that TFSA contribution room that you have? Are you just staring at it? Or are you making the contributions to ensure that that account does its work and helps create that future, that financial future that you want for yourself? Now, what other accounts are there to talk about as far as registered accounts are concerned? The RESP, Registered Education Savings Plan. That's not for adults, that's for minors. So if you have a child who's under 18, then you can open an RESP account for them. That does not necessarily contribute to your own long-term financial plan, but it does in the sense that you are able to put away money for college for your child. And we all know that education is one of the biggest expenses as far as children are concerned. You want to educate them right. You want to give them the opportunities that allow them to be everything that they can be, right? Exactly. So if that's the case, if you have a child who's under 17 and you don't have an RESP open, please go ahead and do one. Set up one either at any financial institution, whether it's a digital bank or physical bank, as the case may be. Now, how does it work? You are able to contribute any amount, but the government will match to the tune of 20% to the maximum of $2,500. So if you contribute $2,500 to an RESP every year, that $2,500 will be matched by an additional $500, giving you $3,000 each year that can grow tax-free until your child goes to college. Now, definitely that works for you in your favor for your long-term financial plan, because if you do that for 17 years religiously, you'd have contributed $51,000. Now, if you add the power of compounding to that, That's a whale of cash that can take your kid through medical school or law school or any kind of education that they would desire. So this is a way to ensure that your child gets the education that you want for them or that they want for themselves, as the case may be. Now, if you have somebody who has a disability, there's a registered disability savings plan that allows you to put money away for a child who is physically challenged, and that allows them to be able to create some buffer funding, whether it's going to be for education or for things that they require to live their best lives. All of these have different tax implications. Some of them save you on tax immediately, think RRSP. Some of them allow you to build financial capacity, think RESP, TFSA. Now, all of them can be used in some way to your advantage, and that's what I'm drawing your attention to today. So that's pretty much all I have for you on smart saving today. It's Friday the 20th. Oh, it's just the 7th. It's just the 7th of November. Sorry, I'm not in October, but I'm already in November. It's the 7th of November. It's Friday the 7th of November. Yes, it's snowing. Yes, it is snowing. It's happening. Winter is here, but it's an excellent Friday, and I'm still excited as I can be. That's pretty much all I got for you this morning. I'll be back next week, and next week I'll be talking about the power of giving and charitable donations. So you're free to join in anytime on Friday next week. I look forward to seeing you then. Probably do an article on this or two today. See you then. Have an excellent Friday, and bye for now.